Traders, welcome back to the channel. We're going over the Nasdaq, the SP 500, what is going on today. We've called the top multiple times, and you're getting that key level push. I'm going to tell you exactly what was said from Jerome Powell and why you got a 600-point drop from the daily open. Like, subscribe, do what you got to do. Every single day, we're dropping the best videos going over the news and what is moving the market. We are not biased. We are interested in only making money. Let's get to it. Now, before we even head into this chart and look at what's happening, you had massive volume on the sell side. We need to take a look at what's specifically going on. Specifically, some of the keynotes from Powell today. I'm not going to cover every key detail. What he said will be here way too long. But the big thing in what he was saying was the Fed's 2% target. So we've heard 3.5%. We've heard 2.5%. Powell's coming on and saying we are hitting 2.5%, coming out pretty conservative. From that statement, you kind of saw a little bit of a bounce going into it. You saw some good stuff coming out. You kind of saw a little bounce in the economy. And then Powell started opening his mouth. 50 basis points will be on the table for the May meeting. And when you read some of this, it doesn't interpret exactly how he was wording it and exactly how he was saying it. I really like the article from Investopedia because they really go into detail about what he was saying. And Powell's putting the pressure on the United States. He is not sugarcoating it any longer. From a quote from what he said today, inflation is a global problem, while adding the U.S. has a higher core inflation than Europe. And you're seeing people like the Biden administration put emphasis that Europe is the one that's under recession warnings and it's not really America and inflation's not as bad here. But Powell's telling you a different story. He's saying it's America, people. We are there, highest core inflation. We have a problem. We had expected that inflation would peak around this time, but we have been disappointed in the past. And he also said going into this as well, and they didn't quote it here. I listened to him speak specifically on the day that they are not betting that inflation is peaked right now. Now, that could be a conservative statement on their end to be more prepared and give a more dovish look into the next time he has to come out and talk. But looking here, he says we will be expeditiously to interest rate levels are the more to neutral level. He did not go any further about this. And he kept this statement very slight. He didn't want to pressure the economy. And you can see why he didn't want to pressure the economy, because he started taking an immediate dump on the economy. You literally went down from 14.3, that key resistance level, straight through 14, all the way down to 13.75 roughly right now. And you're trying to bounce. The S&P, you were at 450 today. You came all the way down to the lows of 437, trying to bounce now. You're getting a little bit of relief pressure. But as we come over here and look at what is actually happening on the market, what is happening with hedge funds, are they buying? What is happening? You were seeing, yes, they were attempting to get these icebergs. They were attempting to get buy orders set, but this was not enough, and there were still more sellers than buyers. You're also seeing the CVD, this cumulative volume delta, being absolutely tracked to the downside, which is going to compare the relative volume on the buy side versus the sell side, continuously coming deeper and deeper down. I mean, when you come and look at the statistics, this is something that was posted in Discord. This is one of the largest intraday point swings of all time, coming in today roughly in the 634, 655 region. And then, of course, back in February, you had your really big all-time high day of almost a 900-point swing. So this is absolutely crazy what's happening in the market and is reason for concern. You need to be worried. And Powell, when they started asking about this 50-point hike, he's saying, look, and Powell, they specifically said, for the next 3 meetings, are you expecting a 50-point hike? Powell took a step back, said, we have to look at what's happening. Again, he's hiding away from these questions, but he's saying 50 points is definitely on the books. 75 is also on the table, but we're leaning more towards the 50-point level. And that's really what they're doing right now. And we've already gone over. When we're looking at where they're trying to get back to those key levels, they got to start doing 50-point hikes. But this is what we're going to look at. What's happening with yields? What's happening with inflation? Is it curving? How did yields react? Are we still inverting as an economy? And let me tell you, ladies and gentlemen, you are 0.004% from a full inversion. Now, if we go back and look at what's happened in the past, we're going to go to the weekly chart really quick. You can come back and see, even back in 2018, you got very close, but it did not happen. You're higher than you were back in 2018. What about 07? What about 06 when you had the housing market collapse? You hit to a full inversion for roughly 1 day, and then you came down and started pushing down. But it was only 1 day. You very rarely stood in these regions. You very rarely continued to make highs. going back to what's happening right now, you're scaling. You're looking like you want to keep going. But what about the dot-com bubble? We talked about this one as well. The dot-com bubble back in 2000 locally. You trended in this area. And we remember, if we start plugging in the chart, if we plug in the SPY chart, what happened when this started to take place? When you had this dot-com bubble here, you took an absolute collapse for the next 1 to 2 years. You're coming back here. You trended in the zone, started making that key fall down on the indexes or on the actual yields. Boom, absolutely toasted. And in my opinion, it is just getting started. And if we're looking at what's happening right now, you are in the stage of denial right here, trying to continue pushing up. But look at that steep drop. It is just now getting started. We're looking at big companies. Tesla posted great earnings. Guess what happened? You absolutely got wrecked today. You come out on these earnings up almost 100 points and then boom, shot right back down. Everything is getting slapped. Amazon right back down underneath 3,000. Everything is getting railed, specifically compared to the S&P. And when we really take a look, when we really start to look at what's happening right now, the S&P and the Dow are lagging. They have not even gotten started. Yes, you saw a dip on the Dow today. Yes, you saw a dip on the SPY today. But in comparison to the Nasdaq, this is not the same level. The Nasdaq has already passed those previous lows on April 18th. The S&P is barely there right now. They haven't even touched. So the S&P has plenty of room to continue down. What we're looking for right now, the key next area, the zone of support, if you will, is going to be down here. We're going to come zoom out. You're looking down here, ladies and gentlemen, 13 flat. You still have about 700 points more to drop on the Nasdaq. I anticipate into tomorrow 13.4, 13.3. More volume is coming. And if you start to get a breakout on the downside volume, you've got to be absolutely concerned. But the scale of this market has got to have you worried, specifically going into earnings. If we continue to get more earnings like we saw from Netflix, you are going to continue getting slapped because you need to show growth overall in the economy. For instance, imagine if today you did not get Tesla's earnings. If yesterday Tesla would have missed on earnings, imagine what the S&P would have done today, because you had this gap up from Tesla's earnings, and then look how you come out and react from SPY. You gap up, hit 450, and then boom, you start coming down. And again, you have to take a look at what's really going on. They're trying to scale. Some of the only earnings I project to be good are going to be coming from Apple and maybe even Microsoft. Nvidia, some of the semiconductors may do well, but if we're looking at social media, big tech that was doing good during COVID, they're going to be getting slapped from Russia sanctions, getting slapped because they're all blacklisting Russia companies. Inflation is through the roof. These are causes for concern, and I don't think we're looking at the big picture here. If you're looking at all the scales of these markets, look at the selling volume coming in general here. On all these big companies, the most sell volume you've seen in days on Microsoft coming in right now at the end of the day. Absolute. Look at Facebook. This is probably one of my favorite put plays going into the next overall earnings season. Facebook. Think about WhatsApp. They're all being blacklisting this Russia whole country right now. Look at what's happening. We saw how Netflix was affected. Imagine what happens when these companies start showing overall their growth and the remaining year of growth and the overall downturn. Netflix already announced these. Already recommend that they are going to probably end up losing about 2 million subscribers this year. What about Facebook cutting off a whole country like that? This is massive room for downtrending to start occurring. And it's happening all while you're getting these rate hikes, people. I don't mean to get animated, but it's all taking place right now. And you're having them slapping duct tape on a bullet wound when it comes to the market. When you look at their tools, they've already said they're not going to stop the overall economic tightening. They are not going to stop it. Powell was asked today. He said, no, we're not going to stop. We can't stop. He said, we are at that point of no return. That is going to wrap the video up. If you got anything out of this, consider liking, consider subscribing. Every single day, more content is coming between 4 and 7 p.m. Central. I'm giving you the updates on the market, the big news you need to be watching, and how you need to be looking at the market going into the next day. Again, we are not biased here on the channel. I'm going to give you the day trading perspective as well as the long-term perspective, because personally, I'm day trading every day throughout the market. I'm looking at the key next level plays, but I'm also taking a look at the trend. I have my longer term position set out, and I'm being very vigilant to what is happening with the fundamental viewpoint of the overall economy. So consider liking, consider subscribing. I appreciate all the love and support. And as always, have a good one, traders.